Hi everybody, today's video is about the JobKeeper Extension. I'm joined today by Iannello, and we're going to cover a few of the major details of the scheme. I'm sure you've all heard of it by now. It's been big news for the past few weeks. I'm going to cover a key change to the original JobKeeper scheme, comparing the JobKeeper and the JobKeeper Extension, go through who's eligible and which payment rate applies to you, as well as some of the admin details. So Paul, to start with, let's go through the change to the original JobKeeper scheme and how that might affect some employees.
Yeah, so what it does is the original JobKeeper scheme, it now brings in more employees to be eligible. This is because it now changes the dates the employees can be with the business to 1 July 2020 instead of March 2020. So if that means they were hired before 1 July, it means they're now eligible for the last 4 fortnights of JobKeeper payments.
Yeah, great. It works really well. I guess if you're a business who's taken on new staff and then experienced a downturn, and those staff were until recently excluded, it's a real bonus for those sorts of employers. Yeah. And I guess it's important also to know that people can still enrol in the original JobKeeper scheme if they haven't already. There's still one more payment to go in that scheme. If you haven't applied, it's not too late. So moving on to the next slide, I've got a link here in this slide to an ATO resource they've made, which gives a good overview of the extension. So I'll just get that up on the screen and I'll get you to take us through that, Paul.
Yep. Yeah, so with this new JobKeeper extension, it's actually split into Extension 1 and Extension 2. So to be eligible for Extension 1, we actually treat them as pretty much essentially two separate JobKeeper payments. So to be eligible for Extension 1, your September 2020 quarter actual GST turnover has to have dropped by more than 30% to the comparable period in 2019. If eligible, Extension 1 payments will run through fortnights of 28th of September to 3rd of January. So that's the end of Extension 1, and then you'll actually have to retest your eligibility for Extension 2, which you'll be eligible if your December 2020 quarter actual GST turnover has dropped by more than 30% to the comparable period in 2019. And these payments will run through the fortnights of 4th of January 2021 to 28th of March 2021.
And before we go on to the changes, we'll just go on to the next slide here where we're showing what actually hasn't changed. So just run through that for us.
Yeah, so the decline in turnover for a business test remains the same. For a small business, including a sole trader, you need to show a 30% decline in GST turnover. It still applies to both employees and business participants. Business participant includes sole traders, partners in partnerships, companies, directors. There will be special rules where the previous year doesn't give a fair comparison. For example, a sole trader who was on holiday or a startup business. You'll still need to have paid your employees first before you can claim JobKeeper in the following month. And finally, you must have been in the business on 1 March 2020. We talked about a change to employee eligibility dates in the previous slide from March to July, but the business eligibility date is not changing.
Yeah, that's one of the confusing ones. You can bring in employees who came on board after March, but your business still had to be in existence after March. So if you started a business during COVID, which would be, I think, an unusual step, especially for our Victorian clients, but you can't just jump into the system later on.
Yeah,
that's great. So let's look at now the key changes. So there's a few major things that are different between the two. So just run us through those differences.
Yeah, you could have done April 2020 to April 2019, or you could have done it monthly or quarterly, but this one is exclusively quarterly. So we're just looking at the September quarter turnover and the December quarter GST turnover, as well as the turnover calculation. So if you were projecting to have a less turnover, you could have actually still applied for JobKeeper, but in this one, we're just dealing with actual turnover. The periods covered were 6 months in the original one, and in this one, it's going to be treated as 3 months, but 2 separate 3 months. And then the payment. So on the original one, there was only one rate, but with this extension, there's 2 rates, and the 2 rates actually change within extension 1 and extension 2. We'll cover that a bit more later.
On to the next slide. One bad month was a key feature of JobKeeper 1. So if you had a bad month in April at the beginning of COVID, like many people did, then you could be in the JobKeeper scheme right up until its original end date of September. But one of the key things I guess we want to emphasize today is that the once you're in situation doesn't apply to JobKeeper extension. You must retest, as Paul said, and you must retest for the December quarter, and you've got to retest to be eligible for the March quarter, and it's based on previous 3 months.
Yeah, that's why we kind of emphasize as well that we're treating these as kind of 2 separate JobKeeper payments. So just because you're eligible for extension 1 doesn't mean you're eligible for extension 2. You must retest.
Yep, perfect. Let's give an example of how the change of rules could affect a business. So let's say a business made, just for argument's sake, to keep it simple, $20,000 a year in the 2019 year, and they're actually going pretty well in this financial year. Let's say they'd recovered by July, but then in September, stage 4 restrictions hit in Melbourne, and their business got closed down altogether. So there's suddenly a big drop in turnover, and I'm optimistic that they'll open up in November, and then be close to normal by December. The change in turnover is more than 30% for September, October, and November, 3 months in a row. In the original JobKeeper scheme, we only needed 1 month. So even using actual turnover, you can see that there is 1 month, September, that will qualify them for JobKeeper. But JobKeeper extension is a quarterly measure. So they have had a decline in turnover for a quarter, for 3 months, September, October, and November. But JobKeeper extension only tests financial quarters, so July to September or October to December. So this business would miss out on JobKeeper extension because it wasn't a quarterly 30% drop. Let's look at the next quarter. So they're going to have a 43% drop in turnover they project. So 2 of the 3 months are below the threshold, and the whole quarter is projected to be below the threshold. But again, they miss out because you can't use projections. You have to use actual turnover under the JobKeeper extension. So this business, despite having 3 bad months in a row, wouldn't be able to claim JobKeeper. They would need to wait until the end of the December quarter, confirm that they had a drop in turnover of more than 30% for December, and apply for payments from January to March. So hopefully that illustrates the difference.
Yeah.
So let's look at payment rates. That's got a lot of media attention as well. So start with extension 1.
Yeah, so the extension 1 payment rate for the tier 1 will be $1,200 per fortnight as well, and then tier 2 will be $750 per fortnight.
Yep, and then extension 2 is even lower again, and again with 2 tiers. So just as got our summary table there. Originally it was $1,500 no matter what, and it's dropped down to $1,200, then $1,000. But for some people, it's dropping even further, and we'll explain why. So moving to the next slide, which rate applies for employees? Take us through the rules there, Paul.
Yep. Yeah, so it actually depends on the 80-hour test. So your employee will satisfy the 80-hour threshold if in their 28-day reference period, the total of the following is 80 hours or more. So actual hours they worked, hours they were on paid leave, hours they paid for absence on a public holiday. So if your eligible employee satisfies the 80-hour threshold, you can claim the Tier 1 payment rate for them, which is the higher payment. If they do not meet that 80-hour threshold, you can only claim the Tier 2 payment for them, which is the lower rate.
Yeah, perfect. So it sounds complicated, but basically the government's saying if you're 20 hours or more, you're full-time and you get the higher rate. If you're less than that, you're part-time, you get the lower rate. Yeah, but for the 80-hour test, we can choose March or July as our reference period. So say if you had obviously employees who came on after March, you can only use the July period, but you could have someone who might have been part-time in March, but they were full-time in June, and they would still qualify for Tier 1, even though they don't pass the March test. So that's a fair amount of flexibility there for employees. The wages condition is still part of JobKeeper. We mentioned that earlier. What is the wages condition, and how do the tiers impact that?
Yeah, so just like with the original JobKeeper scheme, you can only claim for employees whose wages are actually above the payment rate. So once you know which tier your employees are in, you need to ensure them that at least the minimum for that tier. If their hours are less than a minimum rate, you'll actually have to top up their pay for that fortnight.
Yeah. So what about business participants? So it's a similar test, but it's phrased slightly different.
Yeah. So business participants, you actually have to either be your eligible business participant who is actively engaged in your business for 80 hours or more in a partnership, trust, or a company. So you still have to pass the 80-hour test, but that is only for the month of February 2020. You cannot have that test on your activity in June or July 2020.
Yeah, which makes a bit more of a bit tighter of a test than it is for the employees. So that's an important distinction to know. So the 80 hours is not the same.
It's also important to note that, as I discussed, a partner in a partnership. So obviously, in a partnership, there's two people, but only one person can be an eligible business participant.
Yeah, good point. Actually, you might have done 80 hours between you, but because it's only tested on one person, the one person you've nominated has to have done the 80 hours alone, not combined. Yeah, that's a good point. So how do we apply for JobKeeper? JobKeeper Extension.
Yeah. Well, you just do that through your, you can either do it through your tax agent, taxation portal, or the business portal. But if you've already received JobKeeper, the original JobKeeper, you actually don't have to enroll, and we had to fill out those annoying forms to give to our employees. We actually don't have to do that again, unless, of course, if they fall into that window of starting before 1 July and you need to get them up and running.
Yep.
So you don't have to do those two things, but what you do have to do is anticipate who is going to be eligible again. So if there's been any layoffs or anything, or people who have quit, and you actually have to nominate which tier applies to each employee.
Yeah, and doing that, getting that right in your payroll software is important, because where it's not done properly, or you make a change or make an error, it's actually really hard to get the ATO to undo that. We've been told that essentially we've got to ring up every month and stay on hold with the ATO for them to get that fixed up. So whether that be having one too many employees on their system, on the ATO system, or not, or one too few, it's a real hassle to change. You want to try and get that right straight away. Monthly declarations will continue, so I know that we've been doing that for some of you guys, and you've been signing an authority so that we can lodge for you, and many of you also have chosen to do it yourselves on the business portal or MyGov for your sole trader businesses. That'll continue. Sole traders, you'll nominate your payment tier on your monthly declaration. For others, you nominate the tiers through your payroll software, and then you just do your turnover declaration each month. And yeah, you raised a good point when we were discussing this earlier, Paul, about timing issues with JobKeeper Extension. So explain what you mean by that.
Yeah. Yeah, so well, we're obviously doing the you have to operate by actuals GST turnover this time. So it's all about getting your books up to speed and everything like that. So the ATO has actually gave us some leg room with the first two payments for the extension one, um, giving us until October 31 to receive those payments. Like people who are already on the original JobKeeper, I wouldn't be, if you're really unsure on whether you're going to be eligible or not, I really wouldn't be topping up your employees straight away.
Yeah,
So that's why, just have that discussion with them first.
yeah,
And then, your main goal is to work out if you're actually eligible or not first.
yeah. That's right. Otherwise, you're shelling out money you might never see again. So, firstly, get your books up to date as quickly as possible. But as Paul said, you do have some leeway. So you could find out in late October that you finish your books in late October, you work out that you've had a decline
Mm,
for September quarter, and you can catch up. So there's a bit of flexibility there. But
yeah,
after October, there isn't any flexibility. You just got to get the tiers right by then. That's the last chance.
yeah,
So just
mm,
more information on this is available on the ATO website, and we'll be doing a second video with some frequently asked questions as well, and we'll put the links to both of those in the description. Um, Other than that, thanks for watching. If you need any help with this, we're here to help. In terms of, you might be a first-time registrant, you might be needing help with the tiers and how to set up your payroll software properly. We can help with all of that. Just book in an appointment as you normally would. If you're a new client to us and you've been trying to manage this yourself, but now the new, more complex system is a bit much, then we are taking on new clients as well. So thanks everyone for watching, and we'll hopefully talk to you again soon.